Yo, what's going on? My name is Ryan, I'm CPA, and today I'm going to talk about how you can win an audit. Now, there's a couple points in time where you might be searching for this video. If you're searching for this video because you just got a notice of getting audited by the IRS, then this video might not be for you. This is actually more talking about, what you can do in advance in preparation just in case you get audited. That will give you the best chance of winning. So, if you just got an IRS notice saying that you're going to be audited, that's a whole nother video. I might make some video series on that, but there's a lot to explain there. But just keep in mind, this is how to prepare yourself just in case you get audited, to give you the best chance. And these will go over very common scenarios that I see a lot of times in audits, because I've been through several of them. So, there's obviously some scenarios that apply to very specific situations. This will just cover the broad, more common stuff. Also, be sure to smash the like button through the video if you find it helpful. And if you're new here, please consider subscribing to my channel. All right, the first thing I'm gonna talk about are receipts. Okay, so if you own a business and you have expenses, which you will, you're gonna wanna keep receipts for everything you buy. I know it sounds super annoying and super excessive, but it's necessary. I promise you it's necessary. Okay, and this goes the same for, if, let's say you don't own a business, but you have a lot of medical expenses that you usually take on your itemized deductions. It's really important to save those medical receipts that you pay out. The IRS doesn't care about how much you were billed, they care about how much you actually paid after you've been billed. So be sure to keep receipts. Physical and digital copies, doesn't matter as long as you have something. It's also best to notate on the receipt, specifically what it was for, just in case it's not clear on the receipt. Like if you took a business colleague out to a meal, it'll be good to notate on the receipt, hey, this meal was for my meeting with Brian or whatever. At this place. And for if you're taking people out to a lunch, to a dinner, for drinks, be sure to get the itemized receipt that shows all the different drinks, plates, all the dishes that you were ordered, because IRS wants to see the itemized dishes a lot of the times. I'm sorry, the itemized receipts. This is a good practice to get in the habit of doing because, especially if you own a business, you want to keep receipts. This is a good habit to start from the beginning so that you can build on it. It's a little more difficult to try to convince you to start doing it after you've been in business for several years, right? But if you start at the beginning, if you haven't started the business yet, it's a good habit to start so you have good practices as you run your business, and that will help you be successful, okay? So you might ask, well, what if can I just show them my bank statement or my credit card statement? Well, you can show them that. But a lot of IRS agents I've worked with, they don't accept that as proof of payments because they just see this charge to, let's say, McDonald's. Took your client out to McDonald's because you are a fancy person. They see this charge for McDonald's. They can't see what you ordered. They can't see the tax amounts, the sales amount. They just see the line total. Bank statements, credit card statements typically don't work with the IRS, unfortunately. Also keep in mind, there are accounting softwares out there like QuickBooks, Xero. If you go to a restaurant and you eat with a business colleague, and you can then take a picture of the receipt on the Xero app or the QuickBooks Online app, and it links it to the transaction in the accounting software. So you have the receipt digitally stored and linked to the transaction in your accounting software. So it's all in one spot. It's a great way to track your receipts that way, instead of holding folders, boxes, or trash bags full of receipts for the year. Just something to keep in mind, something that you should get in the habit of doing. All right, so receipts are an important one. The next thing I'm going to talk about are supporting documents. Things like invoices and bills and charitable contribution confirmation letters, things like that. They're super important. So receipts show that you pay something out. An invoice shows that you actually purchased something that was worth business expense. Sure, like Amazon, everything you order from Amazon, you get a receipt. It's all stored on Amazon. That's not a big deal, right? You don't have to keep any physical copies. Like I said, it's all on Amazon. Amazon also has invoices that you can print out if the IRS requests. The invoices just show more in detail the item that you ordered and the price, the sales tax that was collected, and all that, just to make sure the IRS can see that you're actually ordering like business related items. Another important things are like, invoices from contractors. If you have a lease in your, let's say your rental property or your commercial property, you have contractors come in, do some repair work for you, they invoice you and you pay them for it. Well, if you have a check payment, sometimes these contractors, they don't issue receipts. So you have at least a check payment and an invoice that breaks down the work that was done. So the two items together, the invoice and the scanned check on your bank, will provide enough information to prove that you paid for these services and these services were relevant to your business. Same thing goes with bills from like the energy company, like utilities, phone bills, all that stuff. Usually those are kept online in your accounts, so I'm not super worried about like printing them out and then storing them in your filing cabinet. Just as long as you have access to them at some point or when needed, then you should be good there. And the last thing are charity contribution letters. If you donate to charity, obviously you probably will try to claim it on your taxes on the Schedule A as a itemized deduction. You probably want to save the charity letters just in case, just in case you get audited. Some states might even require you to send in those confirmation letters or proof of payments to the charities over a certain charitable contribution amount. So those letters are helpful, and if you can actually prove that you actually paid it out, like a canceled check image on your bank account, when you log into your bank, you can get those check images. Those would be helpful as well. And at this point, it would be awesome if you could subscribe to my channel and smash the like button if it's helpful so far. All right, the next thing mainly applies to businesses, but could also apply to personal, is a mileage log. Yeah, so if you own a business and you drive around a lot for your business and you want to deduct mileage, the standard mileage rate from your Schedule C, then tracking mileage on a mileage log is very important. That's the only acceptable way the IRS will allow you to deduct the mileage expense if you get audited. So back in the old days, you would have to keep like a little notebook in your car, ideally. And when you drive somewhere, let's say you drive from your office to Home Depot to get some supplies for your job, you would track down, this day I drove this many miles from my office to Home Depot in order to grab supplies. And that would be like one line of your log. And then once you leave Home Depot to go to your client job, you make another line entry. And it sounds like a huge pain in the ass. And that's because it is a huge pain in the ass. Thankfully, there's apps now that can help you with that. Apps like MileIQ, there's a lot of them out there that will just basically GPS your phone and just track where you drive throughout the day. It knows when you're driving and it knows when you're walking, but it just tracks where you drive throughout the day. And then at the end of the day or at the end of the week, you can swipe like left if it was a business trip, or right if it was a personal trip. And then at the end of the year, you have this full report that's a mileage log, and it's awesome. It might not be awesome if you are weary about people tracking your GPS and having that data, but for me, the convenience is worth that. So something to keep in mind. And if you have, and on the personal side, if you have, you go to the doctor a lot, give your time, volunteer at charities, you can deduct medical miles and charitable miles. Same thing here, you got to keep a log of those trips. That might not be much of a pain if you do it manually, because you might not go as often as you would if you were owning a business and driving a lot. Okay, so what about cash transactions? What if you pay by cash or receive cash? To be honest, I would avoid this as much as possible, because cash is just harder to document. It's like if you withdraw $300 from the ATM to pay your contractor, and the contractor doesn't give you a receipt, Well, on your bank statement, it just shows an ATM withdrawal of $300. So that could be a very gray area for anyone looking at your bank statements or looking at your tax returns to audit. You're not going to really be able to substantiate what the $300 was for. So in my opinion, just avoid cash as much as possible, unless you're trying to, lower your income illegally. Then, by all means, keep doing that. You're doing great. But lower your amount of cash transactions as much as possible. I know some businesses like bars, it's just going to happen. But if you're going to pay out expenses, pay for expenses, I would just avoid using cash to simplify your record keeping. And the last thing I want to touch on is proper reporting. And this is primarily if you own a business. Okay, if you have a business, it's really a good idea to get accounting software so you can have proper income statements and balance sheets to report and to use to file the tax return. That's the first place, if your business gets audited, the first thing they're going to look for is your financial statements. So if you don't have proper financial statements, they're going to be like, well, how did you prepare the tax return if you don't have financial statements? So just be sure to have proper reporting. The other thing too is to make sure you file all your 1099s that you need to. So if you pay independent contractors to do work for you, make sure you take their information on the W-9 and issue them a 1099 if needed at the beginning of the following year. This will just tell the IRS that you're properly following the rules with reporting, and that you don't have to worry about the 1099s because I am filing them. That's all I got for today. It was a very high level look, very brief and broad overview about how you can prepare yourself to give yourself the best chance during an audit. If you found this video helpful, please smash the like button and share it with anybody that you might think may find it helpful. Yeah, that's all I got for now. Take care. I'll see you next week. Stay safe. See you later.
I hit the function, hit the rose till I hiccup. I hit the stage and leave with money that's a sticker. She picture perfect, so I told him I'm a